Commodities risk management is significant because it helps businesses maintain financial stability and, of course, operational continuity. Welcome to another episode of LCFE Market Plus. My name is Joyce Samujame. Welcome back. If you just joined us, you're right in time. This is LCFE Market Plus and discussing the topic of the role of financial data in commodities pricing and risk management is Benedict Afiemo. He's the head of strategy at WCM Capital Limited. Thank you for joining me on set today.
Thank you very much, Joy.
I must say you look good. Come on now, check out my guests.
Thank you. Thank you.
All right, so Benedict, let's talk about financial data in commodities pricing and risk management. I'm concerned about commodities pricing because right now everybody is concerned about the price of things in the markets. But tell us, let's start from the scratch. What's the significance of financial data first in determining pricing of commodities in the market?
Well, it's all about financial data at the end of the day.
Okay.
When you're trying to price any assets, even if it is commodities, even if it is bonds, even if it is equity or any sort of assets, the way analysts tends to determine prices is by looking at all the cash flow that can arise from holding an asset. So whether it is negative cash flow, whether it is positive cash flow, what am I going to get from holding these assets? In the term I plan to hold it, if I'm holding it to perpetuity or on a particular term, how much am I going to get? And let me bring that to what that is worth right now,
okay,
by doing discounting, and that will give me the value of an asset. With that, I have a platform to negotiate further upwards or downwards, and I can go ahead to make the decision to buy an asset. That is the basis for determining prices.
Okay.
So all parties do this to some form or the other. And all market participants bring their own determined prices to the market. And what the market does is that it takes everybody's prices, it averages it out a bit, and with that you get a discovered price. They call that price discovery, okay, which should represent the actual value of any asset on the market.
Okay.
So commodities are no different from other assets in the fact that you also need to know the financial data behind that commodity in order for you to get a price for it. So if you are a producer of an agricultural product and you are going to be purchasing the raw materials, so you're going to look at downstream of your operations, how much am I going to get back from continuing with this process, from producing and selling. How much do I expect to sell it in the market, and how much can I afford to pay? Then factor that with other costs you are going to incur, and that gives you a reference point. So with that, the producer of that commodity can say, okay, I have seen that doing this business, a kilogram of this commodity should therefore be worth 500 naira.
Okay.
Let me see if I can buy it at 500 naira. That is my determined price. Okay. So he can't get there without doing that financial analysis. And it's going to be the same thing for the person even selling it.
Okay.
Yes, it's going to look at what are other people selling this commodity at currently in the market. What is my cost of taking it from the farm and bringing it to the warehouse? What is my cost of putting it on the market to sell? Okay, and how much can I make that is a fair return that should give me an idea of how to price this commodity? So from the beginning to the end of the process of determining prices for any assets, commodities, or other form of conventional assets, financial data is necessary.
No, so that brings me to this question. What are the factors to consider when assessing price trends in commodities? I wanted to use Benedict. We have people who are not even in the commodities, official commodities market now,
Sure.
like the LCFE guys and all of that. So we are looking at explaining this term with them in the most simplest language that they could understand. Please help me, sir.
The factors that determine prices for commodities. Okay, so now price for anything is determined by supply and the demand. Okay, that's you have two people negotiating it, and they will eventually arrive at a price. Now, what affects the demand for a particular product, in this case commodities, and what affects the supply? We have to look at it. What affects the supply of, let us take maize as an example. What affects the supply of maize? Production of maize in the farm is a huge factor of it.
Yeah.
Okay, what is the capacity of that environment to produce maize? What is the weather like? Does the weather support the production of maize? What is the arable land like? Does it support the production of maize? And what about the capability to import it? Does that also support the production of maize, the availability of seeds and all of that? It all affects the supply from weather. Then there are even aspects that do not directly go into the production, but also affect the supply. So, for example, logistics. If you have to transport the harvested products either to the mills or to the place where it will be packed and all that, do you have a network in that place that enables the transport of the harvested products to where it needs to be? All this comes to affect the supply in any area. If, for example, in Nigeria, we produce maize in the north and we did it in the south, and there is no road connecting the north to south, the supply is going to be zero in the south. So you have that fact. You also have the economic environment as well. At the end of the day, when people are buying these things in large quantity, they will need to finance that transaction, which means if you have high interest rates, okay, you are going to have to factor that into the price of your bagged product.
Okay.
So if I have to buy 1,000 metric tons of a particular grain, and that comes to hundreds of millions, and I have to take out a loan in order to finance that, and the interest rate is 50% per annum, it's all going to tell in the price of the finished product as well. So that can even discourage me from even going into that enterprise in the first place, because if I believe that there will be no market for it by the time I'm done, I'm not even going to start it, and that affects the supply. So that is one part of it. And then of course another part is the demand as well. I mean, one problem in Nigeria now is that we live in a very high cost environment, and people have to choose between one product and the other.
Yeah.
Sure, a lot of commodities happen to be essentials, but in the home, people tend to make substitutionary decisions. If rice is too expensive, can I make do with spaghetti?
Okay.
Yes. So when rice becomes so expensive that spaghetti becomes cheap, then it reduces the demand for it.
Okay.
So if the demand for rice goes down, then you have a case where you have more supply of rice than what you have for the demand, and the suppliers have to reduce their prices in order for them to sell, and that brings the price down. So at any point in time, there are always competing factors of supply and demand, and for that particular commodity, you'll have to be factoring a lot of things. But in general, if we're to summarize it, you're going to look at the production factors, what allows you to produce primarily in the farmland: availability of water, availability of farmland, security, availability of fertilizer, good weather and all that, pest control, even natural disasters. All that can affect production. Availability of transportation as well. Transportation is another factor. Then of course you are looking at the cost of finance and the general economy. And you're looking also at what your competitors are doing. So even if we're trying to produce something locally, if we have an import market that is cheaper than what we do here, it also comes to affect the price as well. Then, of course, on the demand side, how much how much income do people have? What is the price of substitutes for that product? So the demand side, the supply side have components that we can break down to some extent and analyze in order to understand.
So what are the
prices.
tools that can help an investor or a producer now, identify these pricing commodities?
Okay, so looking at tools that can help a producer to identify trends, because by the time you have come to the place where you need tools to identify, you're trying to determine what the price would be, or the availability would be in the future time. So generally, analysts or producers or even the sellers, they have some tools for that. So either you are doing a statistical analysis of your price trends, perhaps you want to buy or speculate, or you are trying to model what happens in real life. So you could have a scenario, what sometimes they call financial modeling. So I think some of your viewers may know that. So you can create a model that picks all these components that affect the demand, that affect the supply, model what you have currently and how that translates to the market price, and then ask yourself, what happens if I change a few of these conditions? This you can do by putting an ear down of what's happening
in the market.
Yes, in the market. Not even just in the market. What is happening generally, politically, around the world? I mean, look how much the price of local goods, the price of flour, the price of rice was affected by a war thousands of miles away in Russia and Ukraine.
Yeah, that's true.
It affected us here. And that was mostly because, well, we imported a large amount of commodities from that area of the world. And of course, since we had that import price keeping even local prices low, when that supply disappeared, the price of everything increased. So you could do modeling as a way of trying to forecast what will happen under different scenarios. You can do what they call a time series analysis, when you look at prices over the past 3, 4, 5 years and try to see what the general trend is. Yes. Also look at when you're doing that, you also account for the effect of seasonality. There's a planting season, there's a harvesting season, and during that time, the supply and demand will change, and that affects the prices. So you could just look at the raw data when you have stripped off the effect of seasonality. Where is the trend going? Are prices in general increasing? Or are they decreasing? Okay, now let me adjust for seasonality. What is the price likely to be in the next 5 months when I need that commodity? Those are some common tools that anybody can have. Now, there's also something called a futures market. Although in Nigeria, the futures market is still young. Still quite young. But what it does is you have people whose main form of business is trying to speculate on what the price of particular issues are going to be, and then in the future, and then buy contracts to supply that commodity or that asset
in the future.
Now they'll have to do some similar. They'll have to perform similar analysis to determine what price they would pay for that future contract, or what price they would want to sell that future contract at. These things are legally binding, and once you have purchased this future contract, you have to fulfill it. So if there is an active futures market, you can easily tell where the sentiment is in the next 3 months, in the next 6 months, in the next 1 year by looking at futures prices. I remember a long time ago, I think this was around 2022 or 2021, Around then, the price of naira to the dollar was around 300 and something, and just started to increase. It was around 400, 500, and I was naively expecting it to stabilize. But then I looked at the futures price of Nigeria, of naira 1 year was forecast to be 1,000 naira. And at the time, I thought it was a bit harsh on naira. I didn't think there was a way for naira to collapse
like that. Okay.
so much in such a short space of time. Well, the rest is history, because here we are. The naira collapsed all the way to 1,000 naira to a dollar and fell below that and was approaching 2,000 naira. Even though the futures markets for some assets are not as developed, there is a futures market for currency.
Okay.
Yes. And by checking what the futures market is saying, you can have an idea on what the sentiment, what the discovered price for the future of a particular asset is saying.
Okay. Now, before we go, in your own opinion, tell us, how can a poor pricing management character, lead to a loss of investment for an investor?
It's a simple exercise to think about. If you buy rice, if you go to a wholesaler and you buy 1,000 bags of rice, you buy them at 80,000 because you are expecting that, okay, when I get to the market, I'll retail them at something a lot higher. And you had done your analysis and you thought 80,000 was a fair price, and so you paid the wholesaler 80,000 naira per bag for 1,000 bags. And then you get to the market and you can only retail them for 75,000 because you made an incorrect analysis of what the price was supposed to be. You are going to make a loss of 5,000
on each bag,
every bag, and that will cascade down. You will not be able to recover your transports. You will not be able to pay the bank interest on it. And it can get even worse for small companies with thin margins, or the single business owner that is using their life savings to trade. So generally, whenever there is incorrect pricing, there's always an extent where value is destroyed or value is transferred to the wholesaler or whoever sold you the assets in the first place.
So it's important for investors to critically check all
this is something every trader,
before you put a price tag on any commodity.
This is something every trader has come to know, which is why if you are the man and the woman in their house that are just trying to manage their family, they are not analysts. Whenever they go to the market, they bought rice at let us say 30,000 naira for bag a week ago, and for some reason they need another bag, and they are at the shop, and the seller tells them, oh, it's not 45,000, and they're asking, but you haven't sold your stock already, so you still have bags that are supposed to be worth 30,000. Why are you increasing the price so much all of a sudden? But the shop owner has come to note over a while that if I don't get something close to what the real market is saying, and I sell too cheap, I'm going to lose my capital. So he is always on the phone, asking his colleagues, asking the wholesaler, oh, what is the price saying now?
I know those people are always communicating.
They are always communicating. What is the price saying now? So whether or not he has finished selling his existing stock, he's getting the freshest price from the market, because he has to be able to have enough sales to, first of all, pay for what he bought the existing stock at, have a bit of profit for himself, and enough to go back to the market and buy again.
Wow. Okay, so I guess commodity pricing is an important factor in commodities. Thank you so much for being on set with me today.
Thank you very much, Joy.
All right. And so at this juncture, we'll come to the end of today's episode of LCFE Market Plus. Thank you for staying tuned. Now, till I come your way same time next week, do well to follow us on all our social media platforms and subscribe to our YouTube channel. Thank you for watching. Do have a great week. Bye for now.